Okay, so if we take, for example, an account, here you're going to have this account is a cash. So it's a cash at bank. This is the name. This is a bank account, cash and cash equivalent. It can have only one currency.
Oh, each account have one currency only?
No. It depends on the account type. So bank cash can only have one currency. I mean, if you have a US dollar bill in your pocket, it cannot become a pound.
Yeah, exactly.
So bank and cash only have one currency. Equity can only have one currency because you paid up capital. You can have multiple equity account, but each needs to be in one currency.
Yeah.
This is the accounting principle. But other type of accounts can be multi-currency. Your revenue can have multiple currency. Your purchases can be in multiple currencies. Your account receivable can be in multiple currencies.
Yeah, I see.
So you could go from a Libyan dinar to Saudi riyal to Dubai dirham. You have examples, but you just imagine what makes sense for you, right?
All right.
Let me show you an example of. This is an example of an account which is in multiple currencies. So I log to another. This is another account. So if I go here, and I go to my chart of account, and I go, even to, you can see here that the account is supporting multiple currency.
Oh, yeah, I see.
You have Singapore dollar, euro, Hong Kong dollar, Thai baht, and USD. So if we go to the next one, which is the general ledger. So on the chart of account, there is something important. And, I think it's something that we wanted because multi-currency management suppose that, you are able to define if an account is monetary or non-monetary. And one of the limits that we had, and especially our clients, which are doing a lot of investment accounting, so pretty much a lot of different, for each currency, for each security, they will create an account in a way. For them, it was complicated because in Xero and in QuickBook, you can only define as monetary account receivable, account payable, bank, and cash. And that's a problem because your monetary accounts could be your investment in a subsidiary. It could be your accruals. It could be different accounts. And this is something that you want to be able to define. And in 11, you can. I can define that my deposit, for example, they are here treated as non-monetary, but I could define them as monetary by nature. This is the choice of the accountant to do that. And that's important because after it will allow you to do automatically the unrealized gain and loss calculation.